welcome to Weenie Trades. I'm Greg, and I specialize in options trading. In today's video, I'm going to be going over the SPY. I'm going to be talking about how I traded the SPY today and why I started to buy the dip. So let's get right into the video. First up we got is SPY, S&P 500, big up move at the end of the day. And, you know, we're talking about 420.69 as potentially being a low. You could even see on stream that I was trying to put a limit order at 420.69, and boom. Give me the fill, 420.69, I should get it. No! There goes the SPY, off of 420.76. Nice good move into the close. And it was pretty interesting because it was just slamming really hard into the day. And maybe you guys watched that other video that I made on the SPY saying, hey, I'm going to start to buy the dip at about 440, maybe 435, and then eventually at 420. And I did just that, incrementally in good chunks. But today I was actually able to get some really good size in because of my conviction in that 420 level. So as the SPY's, moving and chopping and flopping all around, we have an opening range move over here. So looking at the broader context, we're starting to accelerate the sell-off. SPY is getting absolutely destroyed, from that high of about 480 and from that lower high at 473. SPY has been just getting absolutely demolished. There's a low, there's a lower high, there's a lower low, but notice how the sell-off was starting to intensify. Once the sell-off starts to go straight down like a waterfall, it could be a hint of capitulation. Everybody's kind of throwing around that word nowadays. But what really made me want to buy the dip was the sentiment. And so when there's a lot of people talking about these products that we maybe should be learning about in our first few days or weeks of trading, that's how you know, hey, a lot of people might be trying to short the market after it's already extended down. And again, that's just a recipe for disaster. So over here on the SPY, what I actually like to do on the front side of the move is sell put credit spreads. So if we go into the SPX over here, I sold put credit spreads on the front side of the move. And I sold long dated put credit spreads. As you can see, this is actually one of my best trades ever. This put credit spread and these call debit spreads were absolute killers. And the reason I was able to hold through such the big move is because I get paid for my time. So I'm selling longer dated credit spreads March 18th, I'm selling the February 11th, and I'm selling the Friday expiration put credit spreads. What's super cool about this is I get paid for my time. So that's why I'm legging into them on the front side of the move. What's the front side of the move? Well, the first part of the day where it's dropping, you get paid extra premium, that's extra money, if you decide to step in and buy the front side of the dip rather than waiting for the trend change. Now, what do I do after the trend change? Well, I start to buy some calls. So calls on the back side of the move, put credit spreads on the front side of the move. So now that we've already got the rally for the S&P, what's next? Well, if we just quickly check the option chain says, by FOMC Wednesday, we could move higher or lower by about $12. So that could put SPY as high as that 450 area, but it could smack SPY all the way down. I don't know if SPY breaks this low. That is probably the low of the week, 420.76. And my average cost is 425. So that's why I'm swing trading the position. I was, it's very difficult sometimes streaming because there's a lot of push pull, a lot of people telling you what to do and saying, oh, this and this, the trend is down. But the thing is, you have to look at the larger term trends. And if you're going for a larger term move, you've got to hold for those larger term moves. So SPY, I do think that it could get as high as that 449 area. That'll be on a pretty decent bounce. If you want to be a little bit conservative, I would go something shorter, something like 443, 444. So those are the next resistances. So conservative resistance on the SPY is about that 443 area. The target that I'm going for, potentially up to 449. But I know that some of these squeezes can get really extended to the upside, meaning, well, there's a lot of bears in the market. If there's too many bears in the market at low prices, they get squeezed higher on a bull push. And they constantly have to stop out. I know this because I've shorted the market when it's been down a lot, thinking, oh, crash. No, you can't do it like that. You're going to get pummeled. You're going to get some pies in the face. And I only want pies in my face on my birthday. Maybe. But either way, SPY 444, first area of resistance. After that, we could probably break Friday's high, but just to probably hit resistance short term. The rally could get as high as 453 though. So 453 on the SPY. That'll be pretty high up. I don't know if SPY gets higher than this 458. So basically I'm saying, SPY, I expect you to probably be in this upper zone by midweek, and then we'll see by the end of the week. I don't know if this is an all-time low, if this is the low for the sell-off, but it could be a short-term low. Another reason why I was using credit spreads on the day was because the VIX was starting to hit some resistance. My number was 37.32, and the VIX got a little bit higher than that, but really, that's an area of resistance that we're likely going to pull back from and start to, fizzle on lower. So that's why I'm selling credit spreads, because when the VIX is high, you get inflated option premiums. So back to the SPX, because option premiums were high, I can sell credit spreads. And even if the SPX doesn't rally or go straight vertical higher, we could just chop around. As long as we defend these lows, I go ahead and profit. That's a great way of trading because it's a high probability type of trade. It's not super aggressive, such as buying calls. It's not as aggressive as buying shares. And actually, my overnight exposure is relatively small. So that's a great way of thinking about it. So if you want to learn about credit spreads, a bull put credit spread is basically the trade that I'm doing. I'm selling 3 of them. As long as SPX is above that level, I get to collect the full premium. Don't have to do anything at all. And that's why I'm swing trading it, because it's deep and in the money and I have a higher probability of receiving the max profit. So the futures trading overnight is probably going to be pretty wild. So my plan for tomorrow is if we are gapping down, I'm going to see if we can hold an hourly higher low, hopefully above 43.03. That coincides with SPY. Hopefully we hold above that 425.78 level. If we do, there's still a chance that we could form an uptrend, at least on the week. Macro point of view, still a little bit more bearish, so we could rally into these resistances and then start to sell off. If we're extended into resistance, like right away, we're hitting like 450, that might be worth a short trade if it's happening really fast, because price tends to revert back to the mean based off the option chain closing probabilities. So our options chain basically has us, maybe rallying up to about 443 by the end of the week. Be sure to comment below what you're watching and let me know if you're ready for the next trading day. Thanks for tuning in. See ya. And hey, be sure to be there Wednesday, 30 minutes before open. Our great friend Romulus is going to be joining us at Weenie Trades Live. You definitely don't want to miss this episode.
Thanks for tuning in.
$41.72. $41.72, perhaps? We still dumping. Still dumping. SPY, new lows of the day. Almost. About to be. Volume's coming on in. 3, 2, 1. New lows of the day. Flushing. Any bids? I'm sitting here at 420.69. Come on. They see me on the order book, so they got to fill me. Do we hit 420? We're about to. We might as well, right? My goodness. We might as well. Whoa. This is capitulation. Nasty flush. 421.0. 421.0. Oh, here we go. 421.0. Let's see here. 420.94. Big market drop right now. Give me the fill. 420.69. I should get it. No!